Hi guys, good morning. Just gone 8:30 here in London. Happy Friday, 28th of September, last day of the week, the month, or trading day I should say, and the quarter as well. So we'll have a look at the charts to begin with on a daily continuation of where we're standing going into the last sort of few hours of the week and quarter, as it will be important to sort of see from a technical point of view. We'll have a look how the markets have digested the Fed on Wednesday evening. Yesterday we saw a bit of dollar strength come back into the market. I think a lot has been left on the table, while the Fed were quite clear in their message of sort of to expect more hikes next year. The market arguably has only sort of priced one of those in, so there could well be a room for the dollar to strengthen. And if we have a look at the charts on those daily pictures, if we bring the euro in here, this is what I sent out technically at the beginning of the week in that strategy report. Quite the key area marked up. Well, this has really been unmoved in the weekly strategy in terms of these May levels and the highs of June. You can see we tried to break through multiple times, but just couldn't extend above it. Whether you want to put that down to technicals or fundamentals is arguable as well. But just trading now back on the 100-day moving average, or maybe just a tiny bit below, in what has been a clear rejection of those highs there. So whether it's down to the dollar strength, whether it's down to the situation in Italy, I think going forward, and especially as we come into sort of the next 3 months, it'll be quite interesting to see where we do end up going. I think if the data out of the US is good and the market actually does start to believe we are going to get more than one hike, then I could see us, well, definitely over the next sort of month, 2 months or so, start to come back down to that low that we saw in September, and obviously you'll be keeping an eye on the low of the year as well. So technically we held up quite well. Where we finish now with the 100-day moving average will be pretty interesting. Going back, you can see when we did break through in April, we then came back to test resistance, and obviously hadn't then retested it going back to September. Let's have a quick look again. When we broke through here, this would be late December, to then extend as well. So it has been a key indicator here, the 100-day moving average. So I'll be keeping an eye on this come the close of the day, and then where we obviously open up for the next quarter as well. Looking over at the pound, similar sort of story, and we found resistance up at levels sort of from the July time, not as sort of strong perhaps as the euro one, but we are again now below the 100-day moving average, which has been cut up quite a bit. We did obviously gap higher here on the change of the contracts, that sort of December contract coming through. I'll be keeping an eye if we just lower this time frame down on this area of support that we found on the last Friday actually, so 131 as well. We'll have a look at the charts on a sort of a shorter time frame as we go through the briefing as well. Equities, well, we'll just have a look straight into how the quarter's looking. Another up quarter for the S&P, another for the Nasdaq and the Dow Jones, which really is just a sea of green. I think it's 11 of the last 12 for the S&P have all finished higher. Not out the question that you could have a really, really bad day and we finish below the previous all-time highs in these markets, but I think it would take something quite special in order to do that. Where we're sitting now on the previous high that we made a few weeks ago, can we close above there or below there? I think will be quite key perhaps for the coming weeks. I'd also now start to get a trend line on from these lows, as we're starting to sort of respect that in a channel going higher. We never quite made it up to the sort of the top end of this trend line in the hunt for that 3,000 mark. And can we do that before the year end? I think we probably will, and then in my opinion we'll start to sort of drift a bit lower next year. Oil, we'll come on to intraday oil market from yesterday in a bit, but I think it's quite clear this market is in a nice trend at the moment. Yesterday you did see the price move lower, only for the dip buyers to come in. I think in the market, certainly we trade here intraday at Amplify, you've got the sort of the equities in the US, the yen, or dollar yen I should say, and oil, which are in a nice trend, and the opportunity to sort of buy the dip, if you like, or buy on a level of support following a pullback is being welcomed. We've broken the key sort of rectangle I've got marked here from sort of beginning at 71 to just over 72, and I think if we do close above the finish of yesterday, and more importantly the low that we had back in July, I think that would be quite key for this oil market, which is still relatively far away from its all-time high, not all-time high, yearly high, but I'd also be looking at Brent going forward there. Aussie dollar, I see a couple of people were talking about Aussie dollar this morning, and a good opportunity to get short. Yesterday's low in the pivot acted as good resistance. Really key support found from a multi-year low from February 2016 to May and November also that year, December. We had a sort of a false break but never really closed below, and now we're contained within the upside. I posted this sort of in the middle of the day on Monday, and was saying how just important this May level 73.25 was. We're failing to really have a go at pushing higher then, as the strength of the dollar perhaps is starting to come back down. The dollar index, and not too far away from that 95 dollar handle, which caused all sorts of dramas a couple of months ago, whether it could break above or below, and now it's just becoming quite choppy as well. That dollar strength has seen gold push lower. Just as you think that gold is going to have that recovery, we had that break here with really this came yesterday. You can see the further push down, and it didn't really want to stop finishing near its low, and that again will be quite interesting to see on a more intraday chart whether we can keep pushing lower or not. Interestingly, this morning we have seen a sort of a follow through of that dollar strength we saw yesterday. Euro here, my top left chart, just breaking its low of the day. Gold top right, you can see this trend line that it broke. We've then come back to find resistance there, and the pound also breaking its low of the day. So the dollar is strengthening, dollar index near its highs of the day. Yesterday we did see those dip buyers, as I mentioned, in equity markets. The low of the Fed on Wednesday acted as really good support. We broke through that high, and then on the cash open, after that initial sort of market volatility, what was the key level around the pivot acted as a very good opportunity to get in on that classic there. Broke through, then it came back to test before pushing higher. Incidentally, we are actually a bit lower today in the S&P, but I think, obviously you've got to take into context the end of the quarter, so it can always be a bit tricky on the Friday here, but overall I do believe this market continues to go higher. There's a lot of appetite to drive these markets higher. Yesterday with oil, mentioned it came lower as well. Let's have a quick look, as it's just starting to have a go at trying to push higher here. So I'd be having a look at the oil market, the high of the day, just breaking through now by a few ticks. But again, similar sort of thing. I had this level marked up. Admittedly, didn't take it on, but it was a sort of strong area of resistance before breaking through on the Wednesday. It was also the low, and then we continued to push higher. It was strong level of support, and now we're continuing to try and see that push higher. Quite key resistance you would expect of yesterday's high in R1 should we be able to get through. The other trending market where I still feel comfortable calling a direction each day regardless of how we open the morning session is the dollar yen. Really this trade opportunity here, where if you didn't if you were brave enough, I would say, to take the low of yesterday, effectively Wednesday at that time on, would have been great. But really when we broke through the pivot, the higher the day went, and then the R1, and there was a couple of good opportunities each time we broke these resistance. You can see now still continuing higher, and made a new high this morning. Ideally, pivot for me would be the area to get in, but I think you've got to take into consideration the previous high of yesterday and the overnight lows as well. Around this sort of area that we're shade in, I think would be another place to keep an eye on. As the dollar is still stronger, equities pushing higher, the yen was weakening after the initial sort of risk off in the markets we saw yesterday. So continuations of that would be the theme I would suggest. Even considering sort of the month-end flows and whatnot. I do believe the dollar is still going to sort of strengthen into the back end of the year. Headlines overnight. I quite like this on the FT. Just sort of summarises the key points. Asia stocks climb on currency. So yeah, with that yen being the weakest for some time, I believe it's definitely a yearly low. Maybe it might even be a couple year low. It was definitely a low for 2018. The Nikkei has made a multi-year high there. So much like that correlation you can sometimes see with the FTSE and the pound and the euro and the DAX Euro stocks, you've seen that there in the yen. So worth keeping an eye on that correlation going forward with the Nikkei. But it's helped push that equity market higher as well. Oil consolidate from their gains on Thursday, yes, perhaps, but you're starting to see obviously oil just have a go at testing that high this morning. I would be focusing on that now as well. The one point that they haven't made here on the FT would be about the situation in Italy, which of course was sort of the main driver, you would say, yesterday morning. If I bring back the euro chart into picture, you can see the largest red candle that we saw yesterday was attributed to the comments out of Italy that we saw, and really, even though we had this sort of agreement on the 2.4 deficit overnight, it hasn't really caught much respite. Still below the limit of the 3%, but still some worries going on there within Italy, and I think that's going to be the theme for today. I wouldn't really. I know we do have actually quite a heavy data calendar today, and that could always be a reason we push higher in this market. But I think the overall bias for euro dollar should be to look to go short for now. I mean, the data obviously could change things up, and I'm going to keep this relatively brief because in 10 minutes we do have the unemployment numbers from Germany, and then not long after that we've got the GDP Q2 reading from the UK as well. We'll come onto the calendar shortly. Interestingly as well, if I just transition back to look at the odds of the next country to lead the EU, I was talking to Tommaso earlier. I said, give me, in a couple of years, what are the chances of Italy leaving? He said, not happening. Well, the odds would perhaps suggest otherwise, with them 2-1 favourites to lead. I think that's just the sentiment at the moment, really coming into play there. Whether they would leave or not, I think is unlikely. I think 2-1 is a bad price. I don't really see much offer in that, to be honest. But looking at the chart more intraday, I keep an eye on those previous lows that we had broken through from yesterday, and even the previous sort of low from today. Maybe worth getting a bit of a trend line back on that. Yesterday's low is obviously going to be an option, but as long as the stop, I think, was above the low of the morning that we had at 5:30, it should be okay for sort of resistance there as well. Let's move that back into picture. The pound, similar sort of story in that the low has offered a good level of resistance. Gold, however, just coming back to test that trend line. So in terms of the correlation that gold has been playing off recently for the last few months, it really is all about that dollar. So I'll be keeping an eye on gold here for these currency markets. If we are to see the market, the gold market, find resistance here, I'd be a lot more confident that these euro pairs, dollar pairs would continue lower. And for now, you can see just testing it, so keeping an eye on that, and oil as well on those highs. Equities, I'd focus more into the afternoon. However, for European, obviously this morning, but for the US afternoon, just seeing the DAX here have another test push of those lows. Yesterday morning we opened gap lower, filled the gap, and then it was a quick push to the downside. I think the push that we saw post cash open in the US was benefited by the fact that the DAX had also already broken its highs. You had a nice trend line from the highs over the last week and a bit that had broken through around that R1. Yes, we'd already come quite far from there, but you can see this time 145 before the cash open, you'd already had T-notes come down, you'd had the yen weaken as well, so that risk off morning flow was in the distance, and what might have looked like a good short for the S&P at the pivot, I think it then actually now looks like the opportunity to get long. So I'll be keeping an eye on the DAX, but not reading too much into the first hour of the session for the remainder of the day, as we do know it can be quite topsy-turvy at best. For now, gold still holding on. Data calendar for today, let's have a quick look. Going into 8:55, unemployment change from Germany. The range expected to come in minus 9,000, minus 20 to minus 5, that range. The number 9:30, the GDP, we'll do a quick rundown for that, but you can see the 0.4 for the quarter on quarter is the low and the high end of the range as well. So not expecting to see too much of a change there. Of course, if there was, then you would see a bit of a market reaction, given that there's no real room for a budge there. Coming into 10 o'clock, we have some more European data. 1:30 as well, you've got some inflationary numbers out of the US, which we do know the Fed look at. We'll be keeping an eye on the year-on-year figure there. How close to that 2% are we? A lot of the points talked about post-Wednesday were just how good these US numbers were, how their inflationary sort of measures were above or on the 2%. If that can continue, if we can maybe hit the top end of that range on 2.1, another reason to perhaps to look for dollar strength into the back end of the week, month, quarter, and then for the rest of the year as well. So quite an interesting sort of data release come 1:30 from the US. You've also got GDP numbers from Canada, month on month and year on year, however it is from July. And then into the back end of the afternoon, well, here in Europe, you've got Chicago PMI and University of Michigan sentiment numbers. However, that Michigan number is a final reading, so not perhaps expecting too much there. Speaker-wise, if I just bring that into picture as well, it's a bit of almost a shock not to see Draghi on there, the amount of times he's spoken these last couple of weeks. However, of course, he hasn't really moved the market too much. ECB speakers, we've got a couple there in Lane and Pratt. Pratt's already spoken this week on Tuesday, spiked the market a touch, but wouldn't really expect to see too much come through there as well. So that's 12:30 and 1:20. 1:30 you've got Fed's Barkin, a voter speaking, and then you've got Bank of England's Ramsden Dovish 2:20 as well, and then after sort of the EU close into the back end of the session, Fed's Williams speaking as well. So while Monday, Tuesday, Wednesday morning might have been slightly more range bound, Wednesday afternoon, evening with the Fed, you see markets picking up a bit, and yesterday was similar in those sort of circumstances. How would I play this morning? I'd be looking for sort of continuations at the moment of dollar sort of strength, I would say. I'd be favouring the dip buying in equities still and dollar yen if given the opportunity. Oil can be bit tricky on Fridays anyway, but I still would prefer the upside. But it's a case of letting the markets tell you what's going on. The data could obviously change things. Comments Brexit related have been quite thin on the ground this week, and it can always it's always quite interesting, I would say, on your Twitter if you have Laura Koonsberg. Let me see if I can just bring my tweet deck into play here. I've got on the right hand side. So yesterday you can see how old these tweets are, 1 day ago, and these are over 24 hours ago. And I feel if she's not tweeting, there's not much that's going to be happening Brexit related, and it really is actually a theme to go on. You see the last retweet from 17 hours ago, so I wouldn't be expecting too much Brexit related stories to come through for the back end of the week. Got 3 minutes now until the unemployment numbers out of Germany. Be keeping an eye obviously on the DAX, which is pushing lower here. Euro still under a bit of pressure. But if I don't speak to you guys throughout the day, I hope you all have a great weekend. The Ryder Cup is starting today, so while the markets may favour the US, may the Europe have a bit of luck. And we know the odds are in our favour, so hopefully McIlroy and Co can do the business for us. But I hope you all have a great weekend. I'll catch you obviously Monday morning anyway, if not throughout the day as well. So take care, guys.